We're back. Thursday. What is it? April 17th?
16, 17?
Yes, sir.
17. Look at it. Ripped through.
We got a holiday tomorrow, but we'll be trading.
We will be. FX is open. That's it. You can't buy a stock. You can't trade a future, but you can certainly trade spot FX.
Which will be interesting. It's been an interesting week leading up until the ECB meeting in about 45 minutes.
Yeah.
What say you? Does anybody care? I mean, there's been a bunch of data this week. It doesn't seem like anybody cares
data
about.
Data doesn't care. What did we have yesterday? Usually a big one. Retail
sales yesterday came out. I think it was
slightly
a mixed
better.
bag. Yeah, the headline number was slightly better. There were some numbers in there, I think, that were slightly worse. So a little bit of ebb and flow, but nothing really. And then you had the Bank of Canada rate decision where they came out unchanged, and you saw a little bit of lift in Canada off of the decision.
They tried,
and then they reversed it.
Yeah.
So really, not even anything there. The big move came from the Powell talk yesterday afternoon, and I believe I'm so lost in today's macro world. Because he came out and said, what, inflation is still kind of a problem.
Well, he said, what he said, from what I gleaned, and I tend not to, I don't like to listen, I don't have the patience to, that the tariffs they had modeled, and they're all economists or bankers, I'm sure they did model it. The tariffs that were actually put in place were far higher than their worst case model.
So that was
he said it in
headline.
a diplomatic way, which
Okay.
wasn't judging like, this is insane. But he just said they didn't model anything close to this. So the knock-on effect was that's more uncertainty. We think we modeled a certain level of tariffs that showed it had an impact on prices. This just kind of implies there'll be an even greater impact on prices. Given that uncertainty, we are in no position to talk about interest rate cuts.
Gotcha. That's what it was. Because I heard
that's all it was.
I heard the inflation piece and the interest rate cuts might not be coming.
He's definitely getting better at this, but he walked a very balanced line of more than everybody thought. I mean, if anybody who's actually doing this wouldn't say it's more than everybody thought, it's true. And from that, I think we're going to see this in every earnings company that in the next 3 weeks we get the bulk of earnings. We either have no forward guidance or, here's a wide range depending on stuff going on.
So it's all
they did the same thing.
It's all uncertainty.
Yeah.
It's not necessarily like, oh, the tariffs are this, and so we're projecting this. It's we have no clue.
Well, they had a projection that there would be a again, you raise tariffs 40% on something, they priced in a smaller subset of an increase in price level. I mean, it's hard to do. They're just saying if they're 80 or 100, that means our little model means there's going to be a bigger bounce in prices. So,
because I saw some of the verbiage come out, but then I saw rates get hit and bonds get bid,
and that
gold gets another. It was already bid, and it gets another bid.
That's just crazy town right now, and they've got people wrong. I mean,
it seems like. Yeah, they've got a lot of people trapped because it's like, oh, it's up 80. Oh, now it's up 100. Now it's up 115. And it's like, man, they're not letting anyone out of any shorts in this trade.
And remember, all the guys, there are so many complex derivatives built off of gold. Not just futures, but swaps and forwards and everything. All leverage, all guys who are making markets on these who have to hedge them as, you think this market rallies, it's overdone. Well, if you've got a guy who's trying to run a delta neutral premium book, you're not done buying at the highs. You're buying more to keep your neutral position intact. So you've got to think about that because it's like, where does this extra buying come that takes us past unreasonable to insane? That's it.
Yeah. An interesting two-sided action in the U.S. dollar this week. But yesterday, it was, from Tuesday to Wednesday, it was the classic, oh, here's the U.S. dollar bounce. And then yesterday, they take all of it out of a number. You had, again, this dollar Swissy 1% moves are becoming normal. Yesterday, again, it was up 1% on, it was either Monday or Tuesday, and then down 1% yesterday. Today, actually getting a little bit of a bounce back. I mean, there's back and forth in that market.
That level
there.
we looked at yesterday continues to be a violent ping. I mean, it seems like such a small thing, even if you went over to the daily.
Sure. Yeah, I mean,
You've had
right down
1,
here.
2,
This doesn't
3,
look
4,
like
5,
much.
6. It's like, okay, the market's quiet. No, those are big.
100-point ranges around
Yeah.
81.50, really.
Yeah, those are big levels back and forth.
But yeah, you can see this week they've tried to bounce this market a couple of times. This is Monday, they take it all down. This is Tuesday, they take it all down. And then yesterday, they took it down and then actually bounced it a little bit. And here today, we're pretty much flat on the week, but 100-point moves on both sides throughout the week.
You would look week over week. Oh, so nothing happened there. No, there's a tremendous amount of back and forth.
For sure. Where there isn't back and forth is this Kiwi continues to.
Yeah, is as you know. We labeled this poor guy the dog of the market.
It was.
It's Teflon now.
Yeah, I mean, they tried to take it down yesterday with the move in equities. I believe. No, I've got my timing wrong. When was? Yeah, this would have been the move off of the Powell speech, and then they bounced it back.
And, right.
This is
in that
last
Powell
night.
speech, they sold
Now
Kiwi.
they bounce it back again.
Because
Yeah.
I was actually away from my desk. I came back. I was like, oh, I just bought some Kiwi.
Well, it seems like they're trying to get the correlation going in some of these flashes between equities and Kiwi or equities and Aussie, and the market is just having none of it. Because, yeah, this is the move, and immediately by the close of the U.S. session, they're back to around their highs for the last week or so of trading, and then overnight it looks like they tried to put some damage on this Kiwi, and now they're back to unchanged, which is to say 59.40, which is the highs for, I mean, the last several weeks, it looks like. Let me get
And I
back to
go
the
back
daily
to
chart.
just general market structure. When you look at that 50-minute intraday, the lows off the new highs never reach anywhere near the previous set of lows. They don't spend much time down there.
Yeah,
And then they grind higher.
yeah.
That tells me that I'm very mindful of selling tops. And if I am, and my top is usually I'm selling a top and I'm giving it 50 points, I'm giving it 20.
Yeah, this is.
I don't have a lot of conviction in that trade, but if you want to do that, I'm actually, and I know statistically this is not necessarily long-term productive, but I'm putting small losers if I'm going to fade this rally, and look for a little bit more on the downside.
Well, let's take a look at the euro
Let me
dollar
ask you
market.
this.
Sure.
This Kiwi has been dogged, and we always talked about the tie-in between China and Aussie and Kiwi. Maybe I'm going too far down the macro conspiracy rabbit hole, but this Kiwi action, which is, again, bouncing off of catching up to an extent to everybody else, but really solid tape action, good performance. And they've ratcheted up. The Chinese have come back and ratcheted up on us, and we've ratcheted up on them.
And Chinese equities are lower, for sure.
Yeah.
Same as U.S. equities. Yeah.
But is this saying maybe the smarter animals in the forest are saying the Chinese could win this trade war?
I mean, if you looked at the price action yesterday, post Fed Chair Powell speech, I mean, Chinese equities were down 1% to 2% going into the afternoon yesterday. Similar as NASDAQ and everything else was down like 1.5% going into the event. I didn't check it on the close, but I was comparing them after the speech, where Powell is maybe a little bit more fearful of these tariffs than everybody wanted him to be in this speech. And NASDAQ and SPOOs move lower by 3% on the day, and Chinese equities didn't move that much.
Right.
And so, I mean, does that tell you, well, that's the telltale sign, and now Chinese equities are going to outperform, and this Kiwi and these Aussie currency markets are going to outperform? No, but I do agree with you that there are some, I don't want to use the word signals out there. There's some price action out there that is saying, hey, man, it seems like the greatest fear is in U.S. equities and in the U.S. dollar when you're looking at these different asset classes around this tariff talk. Because when it was March, it was the great fear is in Canadian dollar and some of these other currencies and some of these equities abroad. now that we're in mid-April and you're seeing the retaliation over the last month, I agree with you. I don't think it's any coincidence that this Kiwi is through its highs for the last, you go back 6 months at this point, it's through its highs and you can't move it lower. Chinese equities, maybe we'll do something for the show next week. They're off, but some of the recent price action, not as violent to the downside as U.S. equities.
They're stinky, less stinky than some of the others.
And the U.S. dollar seems to get punished every time we bring up tariffs at this point, more than any other currency. Right. It's not even, Trump wants to do tariffs on this region, and you see that currency sell off, and then the U.S. dollar sells off. Yeah. It's pretty much U.S. Based fear that we're seeing across the board. So I think it's a good point. We'll see how it all shakes out. But yeah, let's get into our segment for today because
content.
Yeah,
look at you.
It'll be some good stuff.
It's good having the machine back.
U.S. dollar is collapsing, but I want to take a look at the carry trade because prices are one thing, Pete. Interest rates, overnight funding rates, and the carry trade between dollar yen, dollar Swiss franc, but also dollar and even euro or Canadian dollar. A lot of positive carry in the U.S. dollar's favor, but the fear is showing some price action that's negative for the U.S. dollar. So I want to take a look at some of the dynamics. First, harping on the U.S. dollar price action, here you have that dollar Swiss franc chart, and we're down more than 10% year to date, which is a massive move for the first quarter of the calendar year to be down 10%. I mean, that tells you that on an annual basis, you could see a 30 to 40% move in this currency. And we look at volatility all the time, and to think about a 30 to 40% vol in a currency market like this is very, very rare. Now, I don't think that we're going to get a move one way or another in any of these major Forex pairs to the tune of 30 or 40% on the year, but that's the pace that we're on 3.5 months in, down 10%. There, euro is up 9.8% year to date, and it's at its highest prices since 2022. And dollar yen, though it's not necessarily at a price extreme, it's only at its lowest since September of last year. It is down 9.6% on the year. But I mean, you look at this chart here, Pete, this is the monthly in dollar Swiss franc going back the last 15 years. The lowest prices since 2015 and the crazy price action we saw to start that year. But obviously we didn't spend very much time down at 80 or anywhere near that 80 handle, although they flashed down to 75. These are some pretty freaking low prices for the dollar.
Yeah, absolutely. I mean, this is a sea change in what people are looking at long term. Now, does the market overreact? Sure. But from what point?
Yeah.
It will be interesting to see. Right now, I mean, you'd look at this, you say, well, that's capitulation. You've squeezed everybody who's been buying this out of the market. I tend to, we actually saw that in Kiwi where it punched that low that one day and then came up back. We rarely see V bottoms anymore. So this may be the low, but if it is, it's going to do what it does when we went back to that daily chart. It's going to sit, it's going to test, it's going to give you a couple of fake little rallies.
Sure.
And I'm not convinced. So statistically, the rate of pace for the time it's moved makes it seem like it's way overdone and due for a correction because not everything goes one way. I think you have to be mindful around from what level does it correct.
Well, and these first couple of weeks of April are great examples of what you're talking about here, where they're trying, it's almost, I don't know if it's the algos or whatever you want to say, the market's trying to create that V bottom phenomenon, which we've seen so many times so many times, I don't even have to say that. Look at the last couple of years of data where it's like, okay, they punch whatever market lower, whether it's equities, US dollar, crypto, anything, and then they create a V bottom, and it's immediately bought. The first couple weeks of April here, they've moved it lower, tried to bounce it back, and have been just completely unsuccessful. Like literally the next 24 hours unsuccessful. So it'll be interesting. And if we turn that concept on its head, Pete, when we got up to parity with the Swiss franc, it was the same kind of thing where, you know, they got up here, they tried to move it lower, but we were around these levels for 6 months here in 2022 before they moved it off of that upside extreme. Could be the same thing here with this downside extreme where we spend some time down here. But yeah, it'll be interesting to see how much time, because or how much lower they get. Is it 80 or is it 75 or 70?
And we don't know. I mean, in a vacuum, this looks cheap right until it prints 77.
Exactly.
I think we always need to be mindful, just at a very top level, of the context of this holistic market, because it's not just you and I and a bunch of guys trading directionally back and forth. The glue that makes this market work, why it exists, is to facilitate international transactions. Now, that's companies building in one area, selling in another. Now, companies they either build in that cost by hedging that. Okay, I know if I can build this, it's going to take me 6 months to deliver it. I can lock in the price I'm going to get for this goods by hedging. Hedging is a cost. The market's not moving. Why would I cut my margins to hedge?
Yeah.
When markets move like this, traders are compelled to hedge. So this is where we go to why does it was at an unreasonable level. Now it's even at a more unreasonable level. Well, at that point, people who haven't hedged need to hedge, and the guys hedging need to hedge more. So it tends to be, this is where we get this really elastic test of this. When we start that hedging is completed, that market's normalized a little bit, and it usually takes a little bit of time. So when we say, oh, it takes time, why does it take time? Why doesn't it just V-bottom and correct?
Everything's efficient in 2025.
Right.
Yeah.
Well, the mechanics of the efficiency take time to unwind. Then we stage a little bit of corrective action.
Well, it's funny. It's the same thing with VIX. I mean, what you're talking about is fear in a market.
Absolutely.
These are the dynamics of fear in a market.
And the need for end users, and we're a different kind of end user, but an end user who has something else up against it, who needs to protect their prices.
Well, let's take a closer look. I love all of that context, but let's take a closer look at the current interest rate landscape. We even, as recently as the last 24 hours, got further guidance from Fed Chair Powell, who has said that the tariffs and all this fear doesn't necessarily mean that we're cutting interest rates to zero or we're inclined to do anything crazy. We'll look at what the market is thinking they're going to do in just a second. But for the time being, you still have U.S. and U.K. atop the interest rate landscape among major central banks. And it's funny, Pete, this, if you want to call it a game, this conversation was so much simpler. I don't want to say it was simple. Post-pandemic and all the craziness around then, up until the last year, it was everyone's at zero, and the dynamics that we're seeing are really just like, how much more did the U.S. hike than this place? How much more? Japan is still at zero. Now the U.S. is at 4%. Now the U.S. is at 5%, and we're going to punish this yen because we want to get long these dollars. It's not so simple anymore, because the interest rate differential between the U.S. and Switzerland is 4.25%. And you're seeing the lowest prices for U.S. dollar in the last decade plus.
It doesn't quite make sense.
It doesn't quite make sense. But let's take at the end of the day, the prices are the prices. Just a couple of notes really quickly. U.S. rates are down 1% from their 5.5% highs. Everybody has been cutting except for Japan. The euro, the ECB is due to cut actually in a couple of minutes. We're talking here on April 17th, Thursday morning. Japan is the only one who's hiking rates, albeit at an extremely slow pace, from negative 10 basis points to positive. I think they went to what?
Positive 25. And then
positive
to
25, and now they're at 50. Switzerland has cut all the way down to 25 bips. Here's the expectation for the end of the year in the U.S. market's still expecting, I mean, this is lower than where we currently are,
Right.
but still only expecting 3 to 4 cuts between now and the end of the year, or 100 basis points. So 3.5%, which if you look at this landscape, I mean, it's hard to believe that the U.S. is cutting and Australia isn't cutting, or the U.K. isn't cutting at the same time. But 3.5% still puts you higher than most of these major central banks, even if they aren't in a further cutting environment. And I wanted to bring this up and have you take a look and
This is great.
and give your feel on this. This is the indicative overnight rates that I took yesterday, and I even called out because it's a weird holiday schedule. So some of these are one-day rolls, some of them are 3 or 4 day rolls. All that means is you just have to divide the positive carry or the negative carry by the amount of days. But you get the picture. And here, Pete, take a look at what the prices are looking like yesterday from tastyfx, because, I mean, some of these are pretty healthy. Even if you take that dollar-yen and you take into account, okay, it's a 3-day roll, you're still getting over a point every night that you're holding that long dollar, short yen. And now some prices that you haven't seen for the last 6 months plus. You look at that dollar CAD, I understand that we're still that 138.5 is relatively inflated if you're looking at the last couple of years. But I mean, we were 144 bid a month ago. And also looking at that's the 1-day roll for dollar Swiss franc getting around a point. I'm not trying to allude to like, hey, it's you know, great prices for US dollar and you're getting free money every night. The dollar's getting smoked in a lot of these markets, and this may not be the end of its smoking, but it's interesting.
Long term, it's one context that drives activity. Not every day. Again,
it used to be the only one for 2021 and 2022 and 2023. It felt like the only one.
It will continue to be a recurring story.
Yeah.
It is just when, again, collective changes in risk drive prices that overwhelm the swap. But I think this is really interesting context because this starts to speak to long-term bias, is that where we see markets with, you know, very high levels of carry, this has been the story for the last 2 years of dollar yen going from parity to 162. The positive carry that was on the long dollar yen piece, those Canada rates haven't been that wide in a while, which is really interesting to see. And go back to the rates again then too. So there, I mean, it's funny. We've always heard about, you know, the yen carry trade, and for a while it was the euro carry trades when the euros were wrapped closer to zero and we were starting our climb out of the zero rate environment. There is, I mean, when you look at this, you're really seeing, again, Aussie, a relative push. Sterling, not the same dynamic at play, but through Swiss, through Canada definitely being somebody new. We never looked at Canada as necessarily an interesting carry trade. It's starting to become one.
Well, and actually you bring up that euro-dollar piece because in this table, you look at UK and US, obviously it's a push because we're both at 4.5%. The euro-dollar piece, that's a 1-day roll of almost half a point. And so, I mean, and at 114.
Now, we're not saying whether this is right or wrong. But
it's just 114 is a high price.
We have customers who are all about the carry trade. They look at term structure like this, the swap rates, as being, we talk so much on Tasty about cost basis reduction. They look at, they've got a natural bias. They think, these guys think the dollar's going to get stronger. So
in this example,
in this example, I'm expressing my opinion, and I'm actually getting cost basis reduction every day. The market basically is giving me half a point of cushion every day to hold that position.
And that's the dynamic that I think is interesting, is you have a euro-dollar market, for example, on that top line there, that's gone from 102, 103, 104 in the last couple of months to 114, and it's giving the long dollar part of it some of the best
short
overnight.
Euro, i.e. long dollar,
Exactly. It's just an interesting piece. Now, the flip side, maybe to end the show here, is of course, if all of these carry trade dynamics, the big word the last year with the dollar yen crash and then the V bottom, and they were back to 150 in no time, is unwind. And if we're seeing the dollar getting punished here in the start of 2025, and this dynamic unwinds and the U.S. does cut rates to on par with the ECB, to on par with the Bank of Canada,
that's another reason why we see continued dollar selling, because the guys who have these trades in place need to unwind them.
And so then you might see even further capitulation in that U.S. dollar trade. So nothing's free here. I don't want to paint this like, oh, you're getting great dollar prices and you're getting money every night to be long this dollar. There's risk on both sides of this. I just think it's interesting the dollar's getting smoked, and you're getting some of the best overnight fund. It's just the facts. Getting some of the best overnight funding to be long U.S.
We want as many productive tools and trade decision and building bias. I mean, we're directional traders, so we need to have a bias. There's no premium for us to sell. This is another interesting aspect when you start to wrap in what your bias is and what you want to do when the market moves. It's not, positive carry, I got to be short, because otherwise I'm paying to be long. That's not your overriding consideration, but when you look at bias, you also look at carry. Does carry help your decision making, or is it something you have to be mindful of bearing? So, and again, that speaks to, are you a flat every day? This really isn't relevant for you. Are you a swing trader where you're looking at longer periods, a couple of weeks? Absolutely, it is. But another input that lets you make productive trading decisions. Another reason why I love trading these things.
Cool, man. Well, that'll do it for today's segment. And now we'll throw it to Tom, Tony, and Vanetta coming up next. Stay tuned, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before